last 100 years, there have been 5 instances in which Congress passed and the president signed across-the-board cuts in marginal income tax rates. It happened in the 1920s under Calvin Coolidge, in the 1960s under John F. Kennedy, in the 1980s under Ronald Reagan, in the early 2000s under Bush 43, and most recently in 2017 under Trump 45. In all 5 cases, the same 3 economic developments ensued. First, a period of sustained, robust economic growth followed the tax cuts and continued for several years afterward. Second, federal revenues increased significantly over the prior year, and that also continued for several years subsequent. And third, the top income earners ended up paying more in taxes than before, both in total dollar amounts and as a percentage of the total tax burden.
Well, the whole thing seems counterintuitive. So you're saying tax cuts didn't slow the economy, which is what Democrats would tell us?
That's what I'm saying. They boosted it.
Wow. Tax revenues did not decrease. They actually increased.
Yes, they did. And that happened every time. More money coming into the government than before.
And we hear constantly how the rich don't pay enough, right?
Yeah.
What you're saying is, the rich didn't pay less tax.
No, they paid more, and it happened every time. Seriously, folks, you got to let that sink in.